Hi there! If you are tuning into this podcast, it means one of two things. Either you have no clue about managing your finances or you want to take them to the next level. Either way, we've got you covered. Financially Ever After is for the modern day Indian professional who is ready to take control of their financial journey. So let's start building your financial future one episode at a time. Welcome to Financially Ever After. Hi, everyone, and welcome to tonight's episode on crypto investing for complete beginners. My name is Medha, and I'm the co founder at WealthUp along with Ankit. Ankit's going to be your host for this discussion. He has an education in engineering, but he found his true passion in finance. If you're joining us for the first time, Ankit has been working for over a decade in investment banking, but now he's helping professionals achieve their financial goals with WealthUp. So, Ankit will be your host for tonight. And joining us, our very special guest is Dr. Amit Dua. Dr. Amit Dua is a TEDx speaker and founder and CEO of Yushu Excellence Technologies. He is the head of blockchain branch India at SIRG. He's an educator and has trained over 6,000 students. Amit's book on blockchain and technology and its applications is highly acclaimed amongst academia and research. So we're very lucky and very happy to have him explain crypto to us. He's also the co-author of Amazon national best-selling books on machine learning and cybercrime and cyber hygiene. He's published over 50 international applications and filed Indian patents and copyrights for blockchain innovation. So tonight, Amit will be providing you with a solid foundation in crypto investing. And together, we're about to explore the basics of cryptocurrency, including how it works, the benefits it offers. We'll also dive a little bit into the different types of cryptocurrencies and discuss the risks and opportunities associated with investing in this rapidly evolving market. So let's get started on this amazing enlightening journey together. Ankit, over to you.
Okay, thanks, Medha. Welcome, Amit. Great to have you here.
Thank you, Ankit. Thank you, Medha.
Amit, we'll start with the basics. So, if we can, just first of all understand what cryptocurrency is and how it works.
Yeah, primarily to understand cryptocurrency, we need to just understand how is it different from traditional currencies. We know that traditional currency, or we call in our world fiat currencies, where we have rupees, yuan, we have dollars and everything. They are controlled very strictly by the central government, central banks, and their policies as well. Unlike in cryptocurrencies, it is primarily driven and work on the blockchain network, where it is pre-decided on the code on which it works upon. To understand that difference between the existing market and the blockchain, we need to understand how it works on the blockchain first of all. So in this blockchain, where the entire currency is driven by the rule of code which is working on the blockchain network, here the difference primarily lies on the control and the prerequisites that works upon. So in the traditional currencies, the currency is primarily driven and have the foreign policy, have the economic policies. But here in this world of cryptocurrencies, it primarily is working on the rule of code that is working on the blockchain network. So now the network which drives and has a consensus upon who owns how much amount of currency when it is traded upon. It keeps track of that who is trading, who is sending how many transactions, and the participants who are having a consensus upon, who are mining different currencies, primarily decide upon that which transaction, if I'm sending some amount of X coins to you, they are part of the blockchain network. So that's primarily the difference between the traditional currency and the cryptocurrencies, where it is run by the rule of code other than being governed by a few people.
Oh, that's good to know. And so, in terms of cryptocurrency, we understand that it's on blockchain and not regulated by authorities of various countries. But when it comes to cryptocurrency, broadly speaking, for a user, like for a small investor, what is the benefit and what can be the potential use cases for these cryptocurrencies?
Yeah, correct. So to understand properly, they're not regulated in the sense that the prices are not regulated by the government, but mostly the government still have a say in it. Who can invest, who cannot invest, what are the ways in which you can invest. So primarily, government will see who is investing what. So this is first point. Although they do not have the say in the prices of these cryptocurrencies. The second point about you was that how are they and how we can use in as a normal investor for the cryptocurrencies. Am I right?
Yeah, that's right. So, the benefits to investors and the use cases.
Yeah, to understand primarily what exactly is cryptocurrency, that is also very important. So when any money is involved, it has its various properties that have to be in place. It has to be divisible to any, let's say if you are using rupee, or if you are using, in good old days we were using gold, or even if before that we were using barter system. And now for anything to be used as, or anything to be used as an asset to be traded further, it has to have some properties for it. And one of the very important properties, apart from having divisibility and many other things, is the fact that it need to have limited in circulation. It is very difficult to create new, and it has those properties in it in the cryptocurrencies. So as soon as you create a cryptocurrency, beforehand you need to decide upon how many coins they will be there in the entire lifespan of that cryptocurrency. So that is against any other currency that we have in the government. So we know that how much US can print at a moment's notice, and any government can print at a moment's notice that currency. So that separates this currency from the traditional currency or fiat currency. So now when you own that particular asset, like a land is limited. So that we know that it has its own value and it is limited in place. That's why it is so precious. Similarly, gold, that's why it is so precious. Similarly is the Bitcoin. It is contrary to any other asset that we see in the real world. And what are the use cases, what are the advantages for it? Once you understand it primarily, what it is not, you will be better able to take a decision upon that. Understanding the fact that these currencies are highly volatile, first of all, I am trying to not say something more negative, but trying to inform you, and the decision remains upon you, that these have a lot of volatility because they're very new, they're not regulated again by any government or any central regulations. So they have innate in them the ways in which they can stabilize and become the part of us, like the land have been or any other shares have been for any economy. Since it is in a very new phase, it is also evolving and it is stabilizing as well. So we need to understand that there is a huge amount of volatility. It is very in the early phase, so you always have an early mover advantage. But understand the risks and the what exactly cryptocurrencies are, to be able to take a better decision upon it. Of course has the high return and high risk involved with it when you have to work with it as well.
Amit, moving on from this, see, we hear that there are various types of currencies. Bitcoin is there, Ethereum. I mean, these two are very popular ones. Dogecoin has, of course, been made more popular by Mr. Musk. But on a fundamental level, what is the difference between these? And as a common investor, the factors that I should be considering to understand if this one is better than the other one for me.
Yeah, correct. So first of all, let us understand the very famous currency, which is Bitcoin. That initially was started off in 2008, 2009. Primarily, that was a time when we were going through something similar that we may go through in next year or so, or we may already be in. Now, at that point of time, people were already in a mood where we were saying that no, the people who have taken decisions have ruined our lives because we invested something and our entire money is gone. So that point of time, since then, Bitcoin became very famous, and since last over 13, 14 years, it has been regarded as it has proved what it claimed to be. So definitely Bitcoin is one of them. It had its own nodes. So as a network in the blockchain, you have to have a transaction that is going on the network, and somebody has to verify that whatever you are sending is okay, is as per the laws and code that this native blockchain says. So now suppose we here are 15, 20, 40, 60, 100 people who are here, and we ourselves decide to have our own cryptocurrency, and we initially whatever we say, we will have our code and we only will verify that we are transacting based upon the code or not. That's how the blockchain works, and that's how the laws work upon that. It is not governed or regulated by anyone else. So now that was one of the currencies that worked upon that network was Bitcoin. Back in 2013, it started Ethereum as a blockchain which not only allowed to transact cryptocurrencies, but also allowed us to deploy applications on them. So you may be seeing various decentralized applications being deployed on Ethereum. And Ethereum also allows these applications to create their own currencies. So Ethereum also has its own currency, which is the network's currency, and also various applications which are deployed on Ethereum can have its own currencies, as well as some other applications which may not be deployed can also have their own currencies which are traded off in Ethereum. That is the second thing. There are various other alternative coins which are also there, and they have their own utilities as well. Some of them focus primarily on security, some of them focus on scalability, some of them focus on privacy, anonymity. and there are various of them which have their own niche areas to focus upon. And there are other stable coins like USDD, which are backed, supposedly backed by the gold and others. And there are some exchange issued coins. For example, like Ethereum is a network on which we have its own coin like Ethereum. There are other exchanges like Binance. They can also issue their own coins as well. They have their own coins. So various types of coins as well. So one of them is a native Bitcoin, which is the coin of the exchange, that is the Bitcoin blockchain. Then there are some other applications which have their own coins which are listed on Ethereum and that exchanged on Ethereum. And Ethereum also is a cloud platform where you can host and run, or a server provider where you can run. So that also has its own coins as well. So these are various types of coins which are working.
Okay, and as an investor, from an investor perspective, is there any fundamental difference that I need to know, should be aware of?
Yeah, correctly. So let us go to the similarity, how it works in normal world as well. So even when I am purchasing some shares, so these understand that these coins, what we are having necessarily we can think of it, we are purchasing a share of some other company now. Like we have the coins of Reliance, we have the coins of various other companies, Hindustan Unilever and many others as well. We can purchase, and there are various other offerings that may come across now. To decide upon, we need to decide upon whose share we are going to purchase. That is the first thing as well. We need to understand upon that. If you are going to purchase a share of any other company, similarly we need to understand the background of the company whose share we are purchasing. Are we purchasing the coins of Bitcoin? Because Bitcoin is a fundamental blockchain. Whose share is a Bitcoin as well. The other coins are Ethereum, which is a platform which hosts various decentralized applications, allows us to program and work upon. Its coin is ETH. In order to decide which coin we are using, we need to understand that what is the primary business behind that, whose coins we are purchasing. Are we purchasing the coins of the fundamental blockchain, that is Ethereum? Are we purchasing the coins of the blockchain various applications, or are we purchasing the coins of another company like Cardano or Munero or others which have certain applications as well? So these are three things we need to decide upon before purchasing some.
So, Amit, when it comes to this, right, like when it comes to share investing, a lot of us know what is the basis on which we compare different companies, right? Like we look at their fundamental, all these ratios and stuff. I think they're aware about that. So, when it comes to these coins, you're saying essentially that to decide which coin we need to decide which company in this analogy that we need to go for. So, what is it that we look at, or what are those criteria or things that we see in order to decide which company we want to invest in, again, in this analogy?
So now we have various metrics, and since we understand that the investing primarily in the traditional market has been going on for years as well, and something we need to understand that when we are purchasing the share of let's say Apple or Google or any other company, we understand the future of it. So before we start investing, we need to understand that for how long we are investing and what the company is working primarily. And second thing, it is very important to understand that these metrics are way different in cryptocurrency world as well. We have less than 10 years of the investment cycle in cryptocurrencies as well. So any metric that may come across, everyone has to have a consensus upon, everyone need to rely upon, everyone need to make sure that it is not swept away or dominated by any other factor which can be tempered off. So that's why for me, while investing, I rely upon the factors which are the traditional and have been working for so successfully in the past. That is one thing. As a metric, I am not aware of in investing if we have something, what the business is, how stable it is, and how futuristic that is. That is how we work upon in investing. That is, I work upon at least.
Basically, you're saying we look at the stability of the coin, we look at what the future of that coin might be based on its use cases. Those two are at least ones that I understood that we need to kind of keep in mind.
Yes, absolutely.
So when we're deciding this, how do we understand these metrics? So volatility is of course one, right? Where how do we understand the volatility? How do we understand the risk?
Yeah, so understand in any particular cycle, any particular investment, there are cycles that goes across. And every cycle works upon by various external factors as well. So is the case with Bitcoin as well. So as the volatility means very strong volatility will come across. So how does the volatility come across in gold as well? We see that whenever there is some large instability that come across in the fiat currency, gold coins may increase. And so is the case with cryptocurrencies as well. As soon as you will see that there is a lot of instability in the world of the fiat currencies, people try to park their currencies back in these coins, and where their currencies may increase. As the money or cash flow increases rapidly in the fiat currencies, people will try to do in a different direction as well. So that's how their volatility is there. The second most important parameter is how much people have invested already in there. So like you started off with a Dogecoin as a currency. So since it was such a penny share when somebody started investing in this point of time, or had its shares initially, they could have purchased with a limited amount of money, large amount of shares as well.
So, Amit, if I understand what you're saying, then I mean, this sounds like a great way to diversify, right? And Ankit, you can kind of chime in here as well, because essentially what Amit is saying is that when there's a lot of instability in traditional markets, people move to these alternative investments, for the lack of a better word, and then vice versa. So, essentially, that's a good way to look at diversification as well.
Yeah, absolutely. So, no, I think the way people have some amount of, say, gold commodities in their portfolio, because as Amit pointed out earlier, that when there is sort of uncertainty going on in the market, in the traditional market, many times people park some of their funds in gold. As an alternative kind of asset, crypto can be considered one of those, so that some amount, because even like say when you put or when you allocate amount for gold in your portfolio, it has to be a small amount, because that is more of a hedge. And generally speaking, historically, gold moves more or less opposite to how the traditional market moves. And as Amit is pointing out, when there is some uncertainty going on in the main market, people tend to put money in crypto, just like gold. So that can also be a very good hedge for your rest of the portfolio.
Sure. I mean, that's good to know. But broadly speaking, and I understand that we all have different risk appetites. So, this may not be a generic number for everyone, but what percentage of my overall portfolio can be, in crypto to kind of take advantage of this diversification?
Yeah, just to clarify, I mean, even for the most aggressive investor, how much is the maximum they can go for?
Now the question is how much percentage to invest in. That's a very, I would say, the better question to start with it. So whenever we have a portfolio for it, I would say that on the left hand side of it, there are if you make a horizontal line, and in the left hand side we have some commodities which are golds and silver, which are traditional thing that primarily move as the inflation moves across. In between we have 70, 80 to 90% of that moves across in the stocks and debts that we know of, and other assets which have. And I would personally would say that not more than 5 to 10% at max, very max, so the most aggressive person while investing. So understand that investing is very different from trading. So most people would feel that I would buy once and sell off tomorrow, or buy one, sell off after a day. So for me, investment is something which I am holding on for something longer, and that can be used to give me a nice, comfortable place to work upon in my daily life, so that I am not worried about by what is going on in the world and what other people are doing and what world economy may happen. I am confident that I am properly hedged across, and in case of worst and worst scenario, I have 3 to 6 months period of money and my retirement is taken care of. For that particular reason, when I am investing, I would not invest more than 5% or 10% at max in crypto, which is very aggressive. And there is an aggressive bucket as well, wherein crypto is one of them. The other aggressive buckets is, of course, the shares of space, and which are very, very aggressive ones, yeah, which is very high risk and very high reward ones.
No, Amit, you have pointed out a very important point that when you are investing is different from trading. And if you're investing investing is more for the long term. And if you really want to see some value out of it, it has to, even with crypto, you need to leave it for the long term. You shouldn't be expecting that I'm investing today and going in with the expectation that I'll be able to make some money in the short term. So that's an important thing for people to know. Don't consider that just because it's very volatile, you will be able to make quick buck. It may just be the case that you will end up losing a lot of money if you're just going in with the expectation and perception key of a short-term, quick money there.
Yeah, and I also think another important point, Amit, is that you are investing in crypto, making sure that you have taken care of the very basics. So Ankit always talks about having an emergency fund, having insurance, having those kind of basic personal finance things planned out already. You have your retirement planned out. So worst case, even if something happens and you lose a lot of your money, you are kind of taken care of by your traditional things that you've done. Because the thing is, I've seen a lot of people jump into crypto or jump into stocks without even building those foundation, building those basics. Ankit, I'm sure of course you talk to clients, so you've seen this firsthand.
Yeah, absolutely. So, there are many times we call it building the foundation before you start taking risks. So, having some amount in your bank account just to take care of regular expenses, having that emergency fund that can take care of you for a few months, having insurance coverage, having these things in place is what you're doing to build the foundation for your investment journey. Before you get into something which is as volatile as it is also important that when you're building the portfolio, that you build it with initially with having investments which are relatively low risk, and slowly as the size of the portfolio grows, as you get more comfortable with it, that is when you can start adding more risky assets, including crypto to it. And there are people we have come across people who have invested close to 100% of your portfolio of their portfolio in crypto, and they were very confident about it. And of course, this is something when crypto was around $50,000, Bitcoin was around $50,000, and it was just going up and up. So they were very confident, but of course then people had a reality check. And that is why when it comes to these crypto or any volatile investment, there will be ups and downs. You need to have that stomach that you can hold on to it, and you have a plan. Hope is not a strategy, right? So it will just keep going up. So having a plan in place, having those foundation in place, so that you can actually benefit from the ups and downs of these volatile assets, particularly.
So, Amit, the next question I kind of had, is that, for someone who, so I don't invest in crypto right now, and I always thought that, it was something that was too complicated, and I never really wanted to get into it. Has never really thought of, myself as a crypto investor. Any things that you think that, I should watch out for? So, mistakes that you see people doing, or, things that you think are misunderstandings that people have about crypto.
First thing is that educate yourself. First of all, if you are not comfortable with what is land, how does it work, and how I will get money out of it, better not invest in land. If you're not comfortable what is gold, better not invest in gold if you're not comfortable with it. It's your money. You have to take responsibility for it. And how can you rely upon that everyone is doing, so I will do it and I will ultimately get out something? Because everyone has their own persona. Understand why they are saying what they are saying, why others are doing what they're doing. So understand you are an individual person, and you are fully responsible for yourself and your family, for your abundance at least. So this is first point I would say, that educate yourself. What is every currency? Before that, what is blockchain? How does it work internally, and how the psychology changes? Ultimately, the people who are running this particular thing, even though we may say that the blockchain it's based upon code, and in the back end as well, beforehand, in the US we say that it is the God we trust, and normally we trust on people as well. But in line of it, in the back end of it, everyone who is running the companies based upon which the coins are created, they have their own fears, they have their own aspirations and ambitions as well, which may trigger off and flicker off in time to time as well. So you need to be very careful of and having a plan, as just mentioned by Ankit as well. So for you and for others as well, I need to be very careful in saying that. First, make sure that you know what you are doing. Not that like everyone is saying, and many people do investing nowadays as well. Tell me some share, tell me somewhere where can invest and get money. That is not the way to create abundance. That is the way, just I would say that betting or purchasing any particular lottery ticket as well. It's not a lottery ticket, I would say that. It's a very systematic thing you need to understand for it.
Yeah, and these are the people, when it comes to even for traditional investments, say stock market, more traditional investment, stock market, people who jump in and jump out without understanding it are the ones who call it a gamble.
Exactly, you won't lose anything unless you cash out. So even if the person who bought it for 50,000 and today it is 25.5, let's suppose, any Bitcoin, you haven't lost even a single penny if you have not cashed out. And if suppose your plan was 15 years, that's okay. In between misses out, that may work across. But for me, it is very important that why you are investing, what is the reason for it, understand the purpose for it, and then make a plan out of it. Otherwise, it's just a mental exercise that you're doing something and trying to make you happy that I did something. But on the contrary, ultimately, it's not something which is for any purpose. It's just you did something, you get out something. Don't say that it's investing first.
This is helpful. So as a beginner, how is it that someone can start investing in crypto? Like, few steps. But okay, this is this is how you select a crypto exchange. This is how you transfer money, because we have come across news earlier wherein there were only a limited number of banks were allowed through which you can transfer money from your traditional account to crypto account and or exchange before you can purchase a cryptocurrency, right? So to start with, how is it that we can an investor can start?
Yeah, again, I'm not saying primarily for a crypto investment advice. I'm primarily a blockchain educator and I train people on blockchain and create solutions on blockchain. So my understanding has been what has worked for me, what has not worked for me. This is very personal for me, and I am not recommending anything or not suggesting. I would just my personal experience that is there. Since I have been working in this particular blockchain industry for over now 7-8 years, that has been something. So if you want to invest or create some asset or buy some assets, first of all, it is important that you can't directly go. It is very difficult to directly tap onto the network of Bitcoin and start purchasing shares of Bitcoin. So you have some exchanges. There are various exchanges you may go towards it. Binance is one, CoinDCX is one, and there are many of them which are regulated by Government of India. You download their applications or log into their website, and after doing the KYC, you can purchase the assets that you want. That means the crypto assets that you are interested in. And that is how the things work across, and everything is being monitored, how much you are investing, how much you are getting out. And that is after and above that you have made your insurance plan and you have made everything, your other investment that Ankit and Meda are suggesting. After that you do that, but that is a process that you invest in crypto. And understand, this is very important. For this point is important that to understand, whenever you are investing in the blockchain crypto exchanges, right now nothing is there inside the blockchain network. It is only in the exchanges ledger, and if exchanges fail, everything fail across. That we have seen in the last year and many times as well. So it is important that you have the hard wallet or cold storage, that we say that, so that your actual investment that is there in the blockchain exchange, that is also stored in the blockchain network as well. So understand, it's different that if we are here, let's suppose we are 15, 20, 30, 100 people are here, and we decide that let's create our own cryptocurrency, and suppose any third person wants to buy that across, and they would have any middleman who is again outside this blockchain, and they would say that yes, I will give you something like that. Unless everything is registered and notified by all 1500 people inside this network, your investments is highly insecure. So make sure these crypto exchanges whom you are investing in, either Binance or CoinDCX or many other who are regulated and approved by Government of India, these are the agencies or exchanges which are allowing you an easy access, easy share purchase from these Bitcoin assets. So make sure that once you have had a sufficient amount of investment in those exchanges, you have a cold wallet that makes sure that your investments are registered inside the transaction, one of the transactions in those chains as well.
This is important to know, because when you're making your investments, no matter where it is, what kind of investment it is important to protect it, right? If I compare it with the more traditional investments, if you're making market investments, it is held in the depositories. If you are holding, say, physical gold, you do protect it, right? You put it in your locker. Similarly, if you have a land, you build a fence around it so that there are no trespassers. Similarly, as Amit is suggesting, whatever investments you have made, it needs to be you're taking, you need to make sure that it's properly entered in the records, so that even if the middlemen here, referring to this example, even if they are not performing, or they are their records are not done properly, or there are any issues with them, your investments are still secured because of the proper documentation. So good tip. Any other tip, Amit, that people should be aware of, because this is very important for people to know.
Just educate yourself primarily, know that why you are investing, and keep your fundamentals clear. Understanding the roots is very important. Keep your roots very strong. All these offshoots may keep on coming and going like that. If you are clear with, it's just another sector of investment. It's nothing different. We are keeping and having a talk on crypto separately, and that's just a part of another type of an investment hedge. That's it. It's nothing more than that. Any other investment portfolio, you just have to segregate them into 2 or 3 buckets. That's it. And this is one part of a bucket, which is a very, very futuristic type of investment, high risk, high reward type of investment. That is it. For me, that is it. And if your roots are clear, fundamentals are clear, you have a plan to invest in it. Primarily, you will have to just adjust after 6 months or 1 year point of time. Should I invest this particular stock or crypto? That's it.
Great set of informations. Okay, Amit. Now, in terms of investing, just like any other any other asset that we talk about now, if we are investing into an asset which is not very volatile, we can invest more like lump sum kind of investment. And even if for these, like in order to see the result, even if we don't hold it for a long period, because they're not volatile, they slowly keep accumulating returns. Like if we talk about some low risk debt fund, for example, compared to that, we have say gold or equity, which are more volatile. So one option, one strategy over there is okay, when you're getting into that, you should be holding it for long term. And another thing is dollar cost averaging, rupee cost averaging. Do you think the approach for investing in crypto should be similar to these volatile stocks, or if there are any more nuances to it?
As you have suggested that there is some systematic investment or a one-time investment or a planned investment that can come across, primarily understand different strategies work for different people. Some people say that they are in the business, and they say that yes, whatever is the profit at the end of the year, we will invest that. Some people would say that it's better for them to invest. They are a salaried person, and whatever is the profit at any point of time, after a week or after a month, they invest there. Salary person say that whenever the salary comes across, we will ensure that a bunch of it gets invested every point of time. So similarly, I lie in the third bucket, where I keep on investing regularly, systematically on all the assets. But crypto being the one which lies in the last part of it, that is a 5% of my investment. So I plan to do it once, and once everything has been settled off for a particular amount of time, that I invest in. So many people have their own ways. I have something like SIP as well that keeps on coming weekly. There are some things which can be invested at a lump sum as well. So all the investment, like we have in other cases, we have in here, but understand that it needs to be very boring. Otherwise, you will get excited and it will lose its charm. The purpose of investment is to make sure your goals are taken care of, and your ultimate way to reach to your goals is you get focused in what your job is, and don't get too much excited into crypto trading and everything like that. That's not primarily currently your job is. So that is very, very important, that don't get too much excited and carried away by the volatility of it. Make sure it keeps on piling up small.
That's interesting, because I think a lot of the investors, particularly in investors in crypto, a lot of them jumped into crypto because they were excited by the opportunity it is providing. So it's interesting to know that you're saying that don't get too excited about it. Okay, so we have two guests who want to ask questions. Ashish, please go ahead.
So my question, it's not directly linked with cryptocurrency trading investment aspects, but a bit more technical in itself. If you can throw some light on the term mining, we have heard a lot about it, and does it have any bearing on the cryptocurrency pricing, and is there anything that a normal investor should be aware of? Because we have heard a lot of these things, that it requires a lot of energy, but still people can make money. So a little off the track question, but if you can throw some light on it, that will help.
So primarily mining is a concept that that primarily decides upon. So for example, if I am sending some money in this particular group, again coming back to the example where we are limited 40 people, 50 people here, and we have our own cryptocurrency. It's a network, small, maybe a WhatsApp network or maybe a network here itself somewhere, which is very tight, and whatever we are transacting, everyone can see it, and everyone can see that yes, this has been transacted upon, and everyone believes that yes, this is the correct transaction. Now, in the blockchain network, whatever somebody is sending some money, let's say this is another transaction which may be in Bitcoin. Let's suppose our network is, let's say, Ankit network here, and we are transacting in Ankit coin here. Now, whenever somebody is transacting in Ankit coin here in this particular network, everyone can see that. In the blockchain, these transactions, anyone who is sending in different amount of money, after a point of time, they are chunked across in blocks, and these blocks are chained together to make a sequence which is called as a blockchain. And now who will decide what will reside inside that particular block? That's a consensus mechanism that we have to develop, or that is developed already. So that consensus mechanism, based upon that, anyone will mine, and the miner is the person who wins the particular round and will propose that this is the new block on which these are the transactions. So understand that it's like electing a new monitor in this particular round. Every block is called as a round, and the mining is a process of selecting a new block, or is the process of how we select a new monitor. Now the process of selecting a new monitor may be how much the effort anyone is doing, who is the first in every after every particular test. So that's a round of proof of work, we can say that. We are doing a lot of work, and who has done the maximum amount of work, they are selected as the monitor, and whatever the monitor proposes, everyone will verify, is the monitor proposing correct block, we will accept it. The other way is that who has a lot of amount of money in this particular, after every point of time, this is called a proof of stake. Whoever stakes the maximum amount of money, and it is very easy for us to verify that this person has staked in. That takes a lesser amount of energy. Nobody has to do too much amount of computation and too much amount of tests. That is a proof of stake. So generally it takes less amount of energy. And there are other proofs as well. And now we are moving on towards zero knowledge, where it has become even more energy inexpensive. Now, considering your original question, where you asked about that, now understand this is the process of mining. So the process of mining means that selecting a new block, and the selecting a new block, everyone will have a consensus upon that which block is the next block or who is the monitor. So that is the consensus mechanism on which it works upon. Like in the gold mining, people use it. Here in this mining process, we select a new monitor, and the monitor is selected based upon the work or the money and different parameters somebody has used it. Is it fine, Ashish, now?
Yeah, it does help.
Yeah, so now the other question was how much does it impact upon the pricing for it? Again, it ultimately depends upon the use case or the network or the industry you are purchasing share upon. So internally, yes, energy cost may increase or decrease, but the pricing of that particular coin will ultimately depend upon the use case of that particular company or that particular network or that particular asset that you are purchasing in ultimately.
Thanks, Ashish. Renisha, please go ahead.
Thank you, Amit, for this wonderful session. It has been really enlightening. So I just have two very basic questions. The first one being, I'm a student and I don't really have a lot of information about the cryptocurrency world. So what are some resources that you would suggest to me as someone who's just getting into investing in crypto to start off with? And the second question is related to the point you made about the different types of cryptocurrency coins there are. So you said something about certain coins being pegged by gold and how they have more stability. So can you elaborate more on that, and would you suggest those coins over the more unstable ones, or can you just elaborate more on that point? Thank you.
Thank you so much, Renisha. Very practical question. So first, Renisha asked about the resources to know about it. So in the resources point of it, you have a lot of friends. What are your friends? You have ChatGPT as well. You can ask the questions. You have YouTube. You have various other things. Just go ahead and you type a question, whatever you want to ask me or any other person. You will get some basic idea. You have to figure it out from different sources to get an authentic one. You can always refer to books as well. They are more credible ones. So these are the ones to just begin with it. To begin with it, and the quickest way to find out is these ones. What exactly is blockchain technology? How does it work? What are the consensus? What is mining? What are cryptocurrencies? and many things as well. So these are something to start with it, to get interested in. And once you get more excited, yes, I want to learn formally, then that's a separate issue. You can start learning formally through a proper mechanism. But to begin with, if you are a very beginner, I would recommend that just fiddle around with different places, whatever excites you, wherever you spend most amount of time. You can, that particular place, you can start learning more about the blockchain technology and cryptocurrencies. So the second question was on the stable coins. What is stable coins and what are the different types of coins? Among the various type of coins, one of the coins are stable coins, which are backed by some amount of gold or some amount of equivalent dollar that they are there. For example, BTC. BTC is a coin which is backed that if equivalent amount of BTC are issued, they will have in reserve the equivalent amount of the dollar that the equivalent amount of currency. But of late we have seen that that also was exposed to not very good amount of practices as well. But there are some stable coins where you can look ahead and start investing, where their risk appetite and reward would be limited one. They would be backed by the amount of dollar or amount of that equivalent amount of currency. So they will be pegged by that particular price that way. But that is also one way you can think of it in investing as well.
Yeah, so one of the things Renisha was asking also was that, which I think you kind of answered, is that just because they're backed by something doesn't necessarily mean they're more stable, right? Because we have examples of, things being backed, but still there being issues with it. Is that right?
So you understand, this is a very a market where we are moving towards. We have found out a problem. The problem is that the people who are regulating or moving in this world of the money as an asset, which is gold or which is rupees or dollars or yuan, whatever it is, they have the inherent problem in it. That means if you press a particular button, you can print trillions of dollars at a single amount of time. So there is no limitation of the circulation. That is one of the problems which is there in the economic side. To solve that particular problem, Bitcoin came up with picture which has all the points ticked for what should be in a currency. But consider the fact that since it is not regulated one, it is just in the starting phase of it, and various other currencies jump in towards it to make sure that they leverage the amount of people coming in, and if they are not very clear of it, they can keep on investing without knowing it. One of the investments which was supposed to be the one where to be a stable one was these coins, but you are very right that they have been exposed of late, saying that they're not actually following what they promised to as well.
Sure. Thanks, Amit. Vatsal, do you have a question, please?
Yes, sir. Good evening. First of all, my question is that why the major investors like Warren Buffett has said Bitcoin as gambling token, and recently there has been a major downfall in the Bitcoin prices. So can you tell why is it? And third question is what is the fundamental value of this cryptocurrency? Because behind every currency there is something fundamental value. So if you can explain on that part, sir.
Okay, first of all, I will try to answer the third question. What is the fundamental value? So, what is the fundamental value of a gold? It's just like any other stone, isn't it? You have any other stone, what is the fundamental value? Fundamental value is that it's an asset because it satisfies all the properties. It is divisible, it can be carried on easily, and many things as well. It has a limited supply. And its price is determined by how much amount of effort that you have to make to mine 1 kilogram of gold. That is what determines the price of a gold, isn't it? That's why it can be traded off earlier. Now we are not using gold, but 1971, before that, the gold was the standard. Even if you have a single dollar, it was pegged to gold. That determined the price of gold and also the price of dollar. And because we are running in a petrodollar economy, everyone, it pegged on to the price of every other currency in the world as well. That was how it started with it. But now the dollar is not pegged to gold, and we can print as much amount of money. So coming back to the thing that how the price is determined by the fundamental value of it. Fundamental value is how much amount of energy or money you are spending, and because it is a competitive market still, that's the price that you can have it. The other question was why there is so much of volatility. Again, saying that because the amount of supply in 2020 at the time of COVID, the US printed trillions of dollars and gave it to everyone. And at the point of time, I'm talking about major incidents that drove away or increased the price of the Bitcoin or cryptocurrencies. I would talk about the price slash first of all, because at the point of time, everyone gave a lot of trillions of dollars were printed and everyone had that money. So at that point of time, everyone had free money. So they started parking in cryptocurrencies because free money, what do they buy after amount of the normal luxury? You will want to invest. They started investing in this particular asset as well. The prices started increasing. But after a point of time, the interest rate started increasing. The amount of supply in circulation was limited, and the countries and the governments and even the organization which had parked in, of course not the countries, but at least the organization or the companies or individuals who are parked in want to get out of that. They want to make sure they have enough amount of liquidity to pay the EMIs and pay the bills as well for that thing. So they started taking out the money. That's why if you start selling any other asset, the prices will decrease. That's how the price of Bitcoin has slashed as well. And that will keep on happening in the entire lifetime of the cryptocurrency as well. As an asset, you can think of that. As soon as the amount of money will increase in the world, people will try to park in, and as soon as the amount of money will start depleting in the world, they will start to cash out whatever the investment they have in. That's the normal cycle as well. So that is because of that reason the fluctuation has been there, and because of the security and the stability of the coin, that's why over a period of 15 years people have piled on to this money. Starting from 2009 till 2018-19, the prices slowly gradually increased because of the security that it provides. That has been the fundamental reason why its asset value has increased. And the third reason regarding Warren Buffett and Junjunwala and everyone specified that this is having pennies and I don't believe in it, this has no intrinsic value of it. Understand that still we are going towards the roots of it. Even in the roots of it, if you look at the portfolio of Warren Buffett, how much he has invested in anything else apart from stocks. He is a very conservative person. His entire lifespan of return of investment is 12 years and yearly is 12% as well. So lifespan is 12%, yearly is 12%. He is very risk averse person, and similarly for others as well. So I am talking about an investment category which is highly risk one. So for that particular one, you may have some better idea that if you are well informed of it, you can invest a very small portion of yours for investment in that particular category which you are talking about right now.
Thanks for such a detailed explanation, Amit. Vatsal, I hope you got your answer.
Definitely, sir. Yes. Thank you very much.
I think it's very interesting that you pointed out the risk appetite of Warren Buffett, because I think at the end of the day, he is looked upon as, the person when it comes to long-term investing. But you're right. I think, a lot of these assets are very new, and I think it does take a certain amount of stomach, like Ankit was saying, to take on that risk. But I feel that you have to be open to it, and as long as you do your research and educate yourself, I think that's interesting. That's not to say that everyone should invest in it, but at least be open-minded about it. But very good question, Vatsal, I think.
But to add to this, well, Mr. Buffett has also said a similar similar comment on gold. Gold is pretty useless. It does nothing, but it just sits and look pretty. It doesn't create any value. It doesn't create me dividend or anything of that sort. That is also something that Mr. Warren Buffett has said, and there are people who invest in gold, and gold has its own purpose, right? I mean, as I was mentioning earlier, it can be a good hedge for the rest of your portfolio. It's a small percentage, but it's a good hedge for the rest of your portfolio. And as Amit has said, the dynamics of gold is also similar to crypto, because the prices are over there also determined. So supply is limited in both the situation, and the prices are essentially determined only by demand and supply.
So Amit, we talked a lot about selecting the coin and selecting the exchange. I also want to say, is there something that we need to think about when we are selecting the wallet where we are storing this, or is it again, pardon my ignorance, but is there anything that I need to look at when I'm thinking about where to store my cryptocurrency?
Okay, first of all, understand that when we are using an exchange, any exchange, whether it is Binance or anyone, Coin26, anyone, you can take any one of them. These are exchanges, and the wallets are basically the one to connect to you. I'm talking about that wallet which you consider it as a Binance wallet or a Coin-D6 wallet. There are other type of wallets which are MetaMask as well, which allow you to directly do something. And when I'm talking about the one initially, which are the cold wallets, cold wallets allow you to store whatever the currency that you have, cryptocurrency, to directly store it as a transaction in the blockchain. So they are just generally the wallets which enable you to store your cryptocurrencies inside the blockchain as a particular network to it. And there are hot wallets and other wallets. There are different category for that. So as soon as you start investing in, or as soon as you're getting more familiar for it, these terms you will keep on hearing more often: hot wallet, cold wallets, and various other things primarily. But understand that they are more from the point of view of from the technological advancement, and these are again made by different companies. So let's say cold wallet made by Ledger as a one company. Since it is made by one, but it has its own purpose for it. If you are understanding the purpose and if it is satisfying the purpose, understanding the limitations and the what you can say, the exposure that the company may provide as a risk, for which you are using that hot wallet, cold wallet, you will be not that much shocked. I can say that when something happens which are not in favor of you.
Okay, so when selecting wallets, we also need to do a research because there are different types of them and they have different uses or what they're used for. That's what it is, right?
Absolutely. So when you are getting more comfortable with this particular technology, what it is, and it does not take you 5,000 years to understand that. It's basically, there are 5 or 6 different things. What is this particular technology? What is the particular company on whom you want to purchase some shares upon? How I can purchase the shares upon? And how I can make these shares more permanent? And these are the things which will revolve around the entire thing upon it. What is this particular asset, where it is stored, and how I can use it, and later point of time, how I can encash it when I use it. So these 5-6 things are, if you have this particular purpose around this answer or this particular question, you will be driven like a torchlight towards these answers, and this answer will keep on getting deeper, finer, and more juicier as you can develop deep diving into this particular technology as well.
Sure. Okay, Amit, thank you so much. It was lovely speaking with you. We're actually coming towards the end now. So if quickly you can summarize for us, the conversation that we've had today, what are the main key takeaways for our listeners? That would be really helpful.
Yeah, from my side, understand that what asset you are investing in. Make sure that first of all you are investing something. You are not trading. You're not buying the lottery tickets for it, and be very sure of the roots for it. What are the goals for which you are investing? As an asset class for cryptocurrencies, it is working on the blockchain, which is a particular network which is not controlled directly by any other centralized persons or entities or organizations like the fiat currencies, gold. Apart from that, fiat currencies including the rupee, dollar, and everything, so which is different from that. And these cryptocurrencies are nothing but the shares of the organizations which are working on the different organization or have their applications in organization, or they may be residing separately outside as well. They can release their shares which are in the form of cryptocurrencies. To understand the cryptocurrencies, you need to understand what are the companies, to understand what is the blockchain on which these assets are residing. That is what we discuss ultimately. Yeah.
Perfect. Thank you. Ankit, any closing words from you?
No, this was enlightening. This was super helpful. There were so many questions that were answered about crypto because crypto is something that is very new to us, and we have a number of questions, and various people talk about it in various forms. Mostly things are done from more of a marketing perspective, just scratching the surface and not actually dealing with what it really is, what to watch out for, and actionable steps. But Amit has explained things very nicely, and should be a lot of people should be able to understand whether how to approach this in crypto investing. But guys, do understand, as Amit has also very clearly said, it should be a small portion of your portfolio. So just be aware of that, and whether you should be investing or not, and even if you are, it should be a small portion. So thank you so much, Amit. Thank you for taking the time to actually explain it and answer our very basic questions that all of us had.
Thank you so much, Ankit. Thank you, Vedant. Thank you, all the lovely audience. And I'm thankful to you for giving your most precious asset, that is your time and energy.
Thank you. Have a good night. Thank you, all the listeners, for being with us in this last hour, for all your questions. We really enjoyed having this conversation. We're here every week on Thursday at 8 p.m. So, tune in next week with a new topic about investing. Ankit, over to you.
Well, thank you, everyone. Thank you, Mehta. Thank you, Ahmed.
Thank you. Good night.